Welcome to Satya Skills. In this video, let us look into capital market reforms. Role of capital market in economic progress of a country is significant, but till very recently nothing is done towards development of Indian capital market. During 80s of last century, some changes were introduced, but capital market reforms on a significant way commenced from 1991 as a part of structural changes, globalization and liberalization. The following are the some of the important reforms. First one is Securities Exchange Board was established to play promotional role in the development of capital market. In 1992, it was given statutory status which enhanced its powers and responsibilities. At present, SEBI is the chief controller, regulator, guide and promoter of Indian capital market. Abolished CCI. One of the significant reforms was the Office of Controller of Capital Issues, CCI, was abolished to encourage more companies to raise funds from capital market. Restrictions and controls on capital issue were relaxed. Example, restrictions on rights issue, bonus issue, all those were there, they were removed. Pricing of issues are now based on market forces but not on ceiling given by the acts. Another one is transparency in issue. After reforms, companies issuing capital to public are required to make sufficient disclosures, especially about the risk factor. This is aimed at the development of healthy and efficient primary market and is a protection to ignorant and innocent investors. Regulation of stock exchanges. Securities Exchange Board of India is given powers to regulate stock exchanges. SEBI assumed the responsibility of giving recognition, approving bylaws, giving guidelines on its operations, inspection of stock exchanges, nomination of public representatives, and also giving directions on listing etc. with regard to stock exchanges. Then National Stock Exchange and Over-the-Counter Exchange of India were established to provide nationwide stock market to those who are unable to list on other stock exchanges. They offer high quality services at par with global markets. Another one is liberal policy towards foreign institutional investors and NRIs. They now FFIs and NRIs to get registered with SEBI. SEBI formulated guidelines in this regard. Now they have direct access to Indian capital market. Investment regulations and guidelines of NRIs are also liberalized with the prior approval to individuals. With prior approval, individuals and corporate bodies can have access to Indian capital market, which was not there prior to 91. Then modernized stock exchanges. Stock exchanges are being modernized, introduced electronic trading system and network based dealings. Bombay Stock Exchange started online trading. Then reformed management in stock exchanges. The governing body of stock exchanges should have members nominated by the government, SEBI and public representatives. Stock exchanges are required to maintain transparency in dealings. They should disclose carry forward position scrip wise and broker wise. Stock exchanges are required to amend the listing agreements. Then reforms with regard to issue. This is another important one. SEBI introduced code of advertisement for public issue. Underwriting is made optional. Guidelines for bonus issue are relaxed. New guidelines are given to allot shares on preferential basis without considering market prices. Prospectus is to be approved by SEBI. Then merchant banking is now under the regulatory control of SEBI to bring organized development of merchant banking activities. SEBI issued directions and guidelines for each service of merchant banker. For some services, merchant banks are to register with SEBI. Then external financial markets. Indian companies are permitted to access international capital markets through the issue of euro equity or any such other instruments. They are like euro currency. No? That's what you know about it. Foreign Exchange Management Act was introduced, replacing Foreign Exchange Regulation Act, which was a previous one, to facilitate more flow of funds into the capital market. Foreign endowment funds, university funds, charitable trusts, etc. are allowed to register as foreign institutional investors. Foreign Investment Promotion Board was reconstituted and Foreign Investment Promotion Council was constituted to promote foreign direct investments to India. Depositories Act 1996 is passed to provide legal framework for the establishment of depositories to record ownership details in book entry form. It also facilitates the materialization of securities. Establishment of credit rating agencies is another step towards reforms, and Credit Rating Information Service India Limited (CRISIL) was established in 1988. Investment Information Credit Rating Agency (ICRA) was established in 1991. And commodity trading, which was not familiar in Indian markets, was encouraged, and multi-commodity exchanges were established to facilitate it. And SEBI has introduced capital adequacy norms for brokers. SEBI introduced regulations regarding with regard to acquisition and takeovers. Private mutual funds are permitted. UTI is brought under the regulatory fold of SEBI. Investor redressal to tackle complaints is encouraged. There are some more, but these are very prominent changes or reforms. That's all in this video. All the best.